Good morning, my dear friends. This is CH in Mahegde. Welcome to day 14 on Let's Learn SFM practically. Disclaimer, this video is for education purpose only. Do your own analysis before investing. And today, I think more than a disclaimer, we require a warning. This video is truly for entertainment purpose. All actions performed in this video are in safe place and with full safety equipment and done by professionals. Our team is telling everyone not to try any of the activities shown in the video at school, at home or anywhere else. Always remember, we make all our videos by professionals and nobody gets harmed during making this video, because today we are touching upon option strategies where I will try to take the live position as well. So this is definitely subject to huge market risk. So apply your own analysis before you investing. 4 parts in everyday session. Quote of the day: only the game can teach you the game. So you have to be involved to be able to get the flavor of it. More than this, I should not explain. Only the game can teach you the game. What happened yesterday, will not spend much time. Again, Nifty is hovering around all-time high. In fact, it's almost crossed all-time high. I think it's a matter of time we will be at all-time high. Huge short covering yesterday, being month-end expiry. FI bought, DI is sold. Sentiment is still positive. RBI also have come with annual report, which has good aspects. In general, they told the economy is not hit in the second wave, not as much as it was in the first wave. Market took it very positively. Future assessments, I will not be spending too much of time on this today, because today our focus is to learn option trading mechanism. Okay, so what are the terms that you need to keep it in mind? Option trading rules. These rules are not given by anybody, not Warren Buffett, no Jesse Livermore, no Rakesh Jhunjhunwala. These are my experiential 4 points with whatever little experience I have. First, you need to have a view, maybe from chart analysis, maybe from open interest, or whatever the way. You need to have a view. I'm not telling market prediction, but you need to have a market assessment. What is market doing? And then to suit that view, you need to have an appropriate strategy. So many strategies are available. Having a strategy is not sufficient. Having a strategy is like knowing the formulas. If you don't know when to apply the formulas, it's of no use. Similarly, it is like knowing all the rules in a cricket match. Just by knowing all the rules, you can't become a player. At best, you can become an umpire. So in options trading also, strategy comes second. First, you need to have a view, and in that situation, how the batsman will play the ball, that is how you need to make a strategy. And then you should have enough capital in the sense, not just for you to make an investment, what the margin required or the premium required. You also need something called as additional capital for option trading adjustments, or we say firefighting strategies, which I'm not going to talk about it. But if you want to be continuously profitable, just taking a view and having a position not sufficient. You have to continuously monitor it, and if required, you have to do a adjustment trading, a follow-up trading, the firefighting, which I'm not at all touching. Those are definitely high level, and it requires additional capital also. And the last point, but not the least, be ready to lose. Invest the money only what you can lose. It's, after all, still a risky mechanism. You can lose the money, but always you should know how much you lose. Calculated risk. They always say, always take calculated risk, but most people don't know how to calculate risk. We are going to do a small strategy today. Hopefully, your understanding in these areas will grow. Okay, now first let's look at the, as I told you, first point, we need to have a view. For the view, various things can be taken. I will take two simple aspects. I will look at Nifty 50 chart and I look at open interest option chain. Both are freely available data, and with simple analysis, we'll try to take a position. So let's try to have a view. So we'll go to the internet. Yes, Google Chrome is ready. Let's go to first option chain, NSE option chain. So I'll be selecting 3rd June, the next weekly expiry coming on the next Thursday, 3rd June 2021. Nifty index currently trading at 15,337.85. Hope you're able to see 15,337 is the current price. Now, I would like to look at, okay, I think before this, let me look at the charts. Then I'll come back to this. Simply, let me look at the charts. Let's say Nifty in trading view. I will go to Nifty charts in trading view website, most popularly used. I will go to full featured charts. First, let's take a slightly longer view. Let us take 5-year history. Yes, 5-year history. So this downfall was due to corona fall, and then market recovered. Now we are at all-time high. You see the chart, which is turning out to be a beautiful pattern. We have hit the all-time high. It went down, and again we are hitting the all-time high. We are in that zone. So people say it is a resistance. And this is a very critical zone, all-time high, because if you break the all-time high, then we will be inching even more higher at a brisk pace. But again, if you hit the resistance, if market views it as resistance, then it will come down. That's a long-term view. Let us look at what happened in last 6 months. So last 6 months, 2021, if I start, in the month of Jan, it went up, Feb, it went down, then it recovered. You see, this stage is called as consolidation because market is not going anywhere. It's not falling down drastically. It's not breaking the previous low, not it's breaking the previous high. So it was in a range bound mode, in that range. Like if I were to draw a quick line, yes, you can see this is the range bound, or I can say slightly higher. Yes, I will say this slightly higher. So in this range, and that is what we call it as market consolidation phase. And market cannot remain consolidation phase a long time. It has to give a breakout or breakdown, and now it looks like it has given a breakout. So that is what it looks like. And let us look at history. In the sense, now we are touching all-time high, 15,350, 15,400. Previously, when we reached all-time high, what happens? So that was around what this slide last time. This is the one we reached all-time high. I'll just select, let's say, daily charts. So I'll make it as 1-day charts. The month of March, April, May, June, July, August, September, October, November. Okay. So somewhere in the month of February, I think we had reached the all-time high, and after that 1, 2, 3, 4 red candles, we fell down. It can happen now also, but you need to have a conviction, because it reached all-time high again in the next month, and now again it's teaching the next month and reaching the next month. I mean, the all-time high, it crossed the all-time high, breakout. It can also be a false breakout. Only the time will tell whether it's false breakout or not. I mean, there are other mechanisms. I don't want to go behind it. But that line, the resistance zone, is almost crossed. So usually people say no trading zone. but many people wanted me to do option strategy. So I thought of doing it now. So I'm also in a no trading zone, but for your benefit, I will take one position, keeping whatever data available. So data available shows that you are in the verge of breaking out. Market is likely to go up, and I'm also positive. And I don't have any specific news like there is no second wave, and second wave is there, and cases are already improving. Globally, market is happening well, and inflation worries were there, but US government has assured it. So economic data is also coming positively. So at least in next 1 week, I don't have any strong reason to have any negative point. So I'm going for bullish view. And whenever you need to take a bullish view, you should know the support and resistance zones. I don't know the resistance exactly because I'm expecting market price to go up. I look at the support zone. So for support zone, I will look at, let's say, 1 month charts. Okay. So, okay. So you see, this seems to be a good support, right? Market crossed this line. That was a resistance. When you cross, that becomes support. It went up, it came down, it took support there 3 times. When you touch the support too many times, it definitely cross it, either down or upside. And it crossed upside. So this 15,150, or I'll say around 15,150 seems to be one support. And this is 15,000, I mean this high, this swing high we say, 15,250, I will say little down, it's a 15,000, yeah, 250. So 15,150 is one support, 15,250 seems to be the another support. We can also come down a little bit here. You can see 15,000 also seems to be one more support. So I'm seeing almost three supports here, three support zone. One is 15,000. Now we are 15,330 mind data, 300 points down, it's almost 2 point down, 2% down. And then we have around 15,180, let's say 15,200, and we have 15,250. So three zones I'm marking: 15,000, 15,200, and 15,250 is what I am marking it out. We can also write the chart like this. People also write the trend line like this. Looking at this again, you see that 15,250 or 300 is also one more support, short-term support, and 15,150 definitely need to be or 15,100 is need to be a support. Okay, so look, you know that support zones are now 15,000, 15,150, 15,250. These are the support zones. So even if market comes down, one sort of support will be there. Only one support is crossed, then only you think about next support. Okay, so this is about the chart analysis, and this is helping us a view that okay, market is likely to go up. My personal assessment, I have every right to go wrong. Now let us look at what people are thinking, because you know one of the quotes I've discussed, in short term, stock market is like a voting machine. That is how most people view where supply demand gets created. So looking at the option chain, NSE, you know, option chain, calls on left side, puts on right side. Calls initial represents in the money, the whatever the brown color, and white color represents out the money. And the put also, white color represents out the money, the blue, I mean, whatever brownish represents in the money. We are 15,330, 340, so 15,350 is the cutoff point. That's how they have considered. And these LTP means last trade price, they represents option premium. And let us look at OI. OI represents open interest. Open interest means number of live contracts. We have selected June, right? Because June, that is next week, Thursday expiry. So I can use call option to have a bullish view, or I can use put option to have a bullish view. I can use any of them. I'm choosing put option. You have to choose one. You can also do with call option. Another strategy, I don't want to mix it too much. So let's say I'll go with simplest put option. Now put option, I told you, we are looking at the support level, let's say 15,200 and 15,000. And also look at where the open interest is high. I'm not sure whether you're able to see. Maybe I am blocking. Okay, I think I'm blocking. So let me move away to the left side a little bit. Okay, now you should be able to see. Uh, look at the open interest where the open interests are high, and this is also slightly risky because this is a fresh thing. It started yesterday only, because yesterday was pre-month expiry and June month expiry. June month has not started, but June month expiry is only 1 month, 1 day old. So very fresh data, but this is the data we have. So 15,200 I told you, 23,000 is there, looks like the highest. You see 15,300, 21,000 contracts are pending. Open interest means number of contracts are pending, which are live, yet to be squared off. And 23,000 here, and next highest is 15,000. Correct? So whatever the support zone, you see we have seen support zone of 15,150, then 15,000, 15,150, 15,250. But I can look at the number of contracts where people are taking a position, put option, 15,000, 22,300 number of contracts are high, and 15,200 also number of contracts are high. 23,000 is actually the highest, and 21,000 is 51,300. So you can choose these. Strike price for you to take a position. I'm choosing 15,000, 15,200 because 15,300 is very close, and I'm slightly scared because when the market hits all-time high, there's a chance of it's coming down, but no, not drastically. So I'm taking 15,000 and 15,200 as two levels. Now, using those two levels, I'll teach you how to build a strategy. So let me come back to the place where I was in. Okay. Now let me explain you the strategy which I was trying to do. Okay, that I will do with the help of Sensible, because I have an account with Zerodha, and Zerodha account holders can easily log into Sensible, where option strategy can be built and you can view the charts. So Sensible, Sensible option. Okay, Sensible. Let's go for Sensible. So we have here they also have option chain and all. I'll go to option strategy builders. Okay, so various things are available. On left hand side you can see the graph. Based on your view, this website only will suggest you uh, the payoff charts. And I assume you know all these things because I already covered in my previous sessions what are the basics of call option, put options. So I'm taking a bullish view, and this time I'm using the put option, that is bull put spreads. This is the graph will look like for taking a position of 15,350, 15,150. Okay, let me do one thing. Let me come back to PPT and explain you some basic points. Then we look at that chart or analysis once more. See, two positions we are having. 15,000 is one level support, number of contracts are high, and also we have seen open interest is high. And 15,200 is one more support we are seeing. Now, I'm using put option. Should I become a put option holder or should I become a put option writer? I'm taking a bullish view. Therefore, I will become put option writer. Means it is P minus. And what do you mean by put option writer P minus? Being a writer, that is, I am betting. My view is markets won't go below 15,200 because the holder is telling it will go below 15,200, but the writer, I am taking position, no, it will not go below 15,200. There is a support. For that, how much premium I'm getting? Just look at the option chain. Just go to the option chain. I'll show you the last traded price. Option chain 15,200 put option. What is the last trade price? Last trade price 63.1, right? 63.1. So I will receive a premium being a writer of 63.1. That is lot size 75. That market price will not go below 15,200 as long as market don't go below 15,200. I know 15,330 is current level. It can fall down. Still, I'm not worried as long as it does not go below 15,200. Clear? Then how much profit I make? 63.1 being a writer. So if it go to 16,000, 17,000, my maximum profit being a writer is 63.1. Writer profit is always maximum premium. But if it goes below 15,200, for every one point, I lose one rupees. That is where I am bothered. Unlimited profit. The market can go down anything. So I can have shivering. That is, we start getting worried. Stomach starts burning or whatever it is. It's not comfortable. So we want to take a hedging position. So I will go with 15,000 where I become a put option writer. I'm sorry, put option holder. What is the reason put option holder? If it goes below 15,200, okay, I will take the loss, but too much loss I don't want to take. I want to have a limited profit. That's why I'm a limited loss. I'll go for 15,000 put option holder position. So holder position means I pay premium. How much I pay premium? I'll look at the option chain. Premium is around 26 rupees, 25.95, 26 rupees approximately. I will pay 26 rupees. And if market goes below 15,000, I am not worried. My loss will be limited. I'll incur loss. My loss will be limited. So below 15,000, I am having a limited loss. Above 15,200, I am having a limited profit. So this is a strategy where I am building limited profit and limited loss strategy. I'm only doing for next 1 week, and just to show you the ways in which the strategy can be built. So I'm not going to aggressive here. Let me show you how the graph will look like. How easy for you to build in websites. Opstra is there. Sensible is one. Being a zero the account holder, Sensible gives me the good opportunity. A lot of things are there. Therefore, I'm going for it. Opstra and all you can try. They are available free also. Even in Sensible, lot of free points are there. So I'll go back to the internet. I'll go to the Sensible. Even if you open account in Zerodha, you'll be able to get these things. You can check for description. The link is there for you to open the Zerodha demat account. Everything can be done online. You can think about it. Okay, so now I'm trying to build a strategy. So I'm using a put spread, bull put spread. What is spread? We are having a two prices. What is the two price? 15,000, 15,200. I'm taking a expectation market will go up. So this is bullish view. So bullish view, and we are creating a spread. And which spread I'm using? Call or put? I'm using put. So it is bull put spread. Bull because market is likely to go up, my view. Put because that is the instrument I'm choosing. Spread because we are trying to play between the two strike price. And how we select the strike price? Based on the open interest and chart analysis. Okay, now let me build that here. So 3rd June expiry, 15,200 we are selling, we are writing. So 15,200. Hopefully you can see on the left hand side, 15,200 I am selling. And 15,000 I will buy. Sorry, I'm doing plus, I'm doing minus. So 15,000 I will do minus. Okay, so I'll buy. Right? So 15,200 I've sold. That is my profit zone. But to have a protection, to have a hedge situation, 15,000 is where I'm taking a hedge, where I'm taking a put option buy position. So I'm a buyer at 15,000, seller at 15,200, and 69.15 is the premium that I will have to receive, and 28.2 is the premium I'll have to pay. The difference will be my profit. Let's look at the pre-endal account. That's what many people would like to see. Maximum profit that is I can achieve is 3,000. Maximum loss is around 12,000. Break even is 15,150, 159. So we are at 15,337, and it has to come to break even point 15,159 means it has to fall by 15,159 and 15,337. So it has to fall means it has to fall beyond almost 1.16%. It has to fall. It might, I'm not telling it will not, but looking at the market view, looking at the situations, positions, it seems market might go down in next 1 week, but not below 1%. Of course, I can go wrong, in which case I don't want unlimited profit. That's why I'm taking a position. And also one more advantage is there, when your position is hedged, you will get a better margin requirement. Your margin requirement will reduce. Sir, what is margin? I will not discuss it now. This is not the time. So how the chart will look like? This is the chart, payoff chart. Hope you're able to see. Yeah, you're able to see. So this is my cutoff point, break-even point. That is what 15,159. Let's say 15,150. And my maximum profit 3,071. As long as it goes beyond that, below that, I will have a loss. But if it goes below 15,000 also, I'm not worried. My maximum loss is 11,000. So 3,000 the profit and 11,000 the loss you are telling. True, but that is the nature, right? Let's see, probability of profit, POP, they are telling 80% profit probability. So because we are taking a lower thing, right? So that is, we are taking slightly out the money option. 15,000 is also out the money. 15,200 is also out the money for a put option. So when you take the out the money option, premiums are less. So premiums are less means your risk is also less. Premium is less, risk is less, profit also less. So I'm not trying to be too aggressive here. At the same time, I'm not trying to be too safe here. I hope you're getting the hang of what we are going to do. And this is the chart, and this chart applies provided you remain invested till expiry 3rd June. So today is 28th May, first day, and next Thursday will be the expiry date. So if you remain invested till the expiry date, this will be the position. If you exit before that, that is also possible. Then your profit or loss may be different than what is shown here. And if that, then strategies are also available for you to exit before that. For that, you need to consider theta, decay, time decay, or delta and all. But I don't want to confuse you too much. We are having a simple one view. Next week, market will not fall below 1%. We have seen at 15,000, there is a support in chart. 15,200, there is a support in chart. 15,000 open interest is high. 15,200 is also open interest is high. So we believe market is good poised. It will not go below 15,200. So we are creating the spread. So 15,200, I sold the put option. I collected my premium. At 15,000, for safety purpose, I bought the put option and I paid premium. So if it goes below 15,000 also, I'm not worried. I'll make loss. How much loss? I'll make as good as 12,000 loss. But the chances of losses are less. So you should not only look at the amount of profit, you should also look at the probability of it. So looking at the market view, market trending, I think, they always say, don't try to predict the market, do follow what market is doing. Market is inching towards all-time high, things are positive, but we are not taking an aggressive position. If it is aggressive position, I would have entered into futures, I would have taken into call option, which I'll discuss maybe in subsequent session, future versus option versus stock. But we are not going very aggressive. We are telling market will not fall below 15,150, 159. 15,337 we are having. So I'm not taking a view market will go up. I'm taking a view market might go up, market might come down, but not below 15,150. So what if 15,150 will fall? Of course you lose. You can't make profit in all the situations. Of course, there are non-directional strategies like straddle, strangle, iron fly, iron condor. But I'm not doing that now. Too much in a day might not serve the purpose. I'm taking a view, simple view, market will go up. But I'm not aggressive here, so I'm limiting my profit. Why I'm limiting my profit? Because we are in all-time high. And during all-time high, we should not take too much of risk. So I'm not expecting market price to go up, but I'm expecting market price will not fall below 1%. That is the strategy I've built. And how to trade? Very simple. This has got linked with Zerodha. I told you I have account with Zerodha. So I clicked on trade all. That's all. I clicked on trade all. It is taking me to Zerodha website and I can place the order. So I'm waiting for 9:15 to happen. Let's see if 9:15 happens. I will place the orders. This is done. Next also place the order. Done. So if I go to Zerodha, one order is completed, other order is pending, open. So I'll go to Zerodha and show it to you. Orders. Okay. Oh, okay, it has come. Last trade price is almost okay. We are placing at 69, but it is 43. I don't think it will place well. So I have to change this. Otherwise, it will not happen. So I'll modify this order. I'll modify this to the current price so that it will get executed. I think 69 rupees we thought we received. No, 63 will not receive. Receive only 43. No problem. 43 points. I'll say market. Let's see if a market I can place it. Modify. Okay, then done. So what is that I sold at? I sold at 43.75. I purchased 17.5. So that will be my position. So my profit margin is actually very less now. 43.75 I've sold, 17 rupees I purchased. So almost 20 rupees I think. 75 lot. So my profit is maximum 1500. My loss is also my cutoff point also would have been slightly high. But anyway, so I have created two things, 43.75 and 17.5. 43.75 sold 15,200. 17.5 I have purchased. Uh, and let's look at the today position. Okay, it's almost a loss. It's happening. Loss, profit both will happen. That keeps changing. But we'll see what will happen on the expiry date, that is on 3rd of June. I hope you have learned something new. We'll stop at this point today. Tomorrow, when we meet, we'll continue with our regular sessions. Till then, take care. See you. Bye bye.